The race is on. Almost a dozen Bitcoin spot ETFs have stormed the marketplace after the SEC approval. Let's continue to take them one by one. Joining us from VanEck to discuss the HODL fund is Matt Sigel. He's the head of digital assets research. Matt, welcome to the Schwab Network. Thanks for being here this morning.
Morning.
Hey, a great hat. I got one too. I'm loving it. This thing is, I don't know if I want to, should I put it on though as a no coiner? I don't want to like jinx you by putting it on.
You got to wear it and show it off and educate people.
All right, here we go. I mean, it's pretty fresh. It looks pretty good. I got to say, you guys are definitely killing it with the swag. Tell me about the fund. How does it distinguish itself now from a heavy competitive space?
Yeah, I mean, I think the bigger message here is that investors, your viewers, should be thrilled with how these ETFs are trading. $4 billion in volumes yesterday, another 500 million just in the first half hour of trading today. All the vehicles are trading at less than a 1% premium to NAV. The spreads are 25 basis points or less. We expect those to come down over time, and we think that these ETFs are going to unlock significant demand because of the cost savings for retail and the security for institutional. And in the end, this could be a 90% cost savings compared to buying Bitcoin on spot. As for how we differentiate ourselves, in the end, these products are going to be pretty similar, but we've put a lot of effort into education and table setting. We made the biggest seed investment among any sponsor with more than $72 million of our own money. So we put our money where our mouth is, invest alongside of our clients. We've got a ton of material support, research. We're not tourists in this space. We're embedded with the crypto community and donating a percentage of our profits in this fund back to the Bitcoin core development team. So, we expect to make money from price appreciation of the Bitcoin as well as the fees. We've been involved in this space for 7 years. We've generated considerable conviction. All the products look, quite liquid at the moment.
So when you're measuring the success of this from your own standpoint, the kind of market structure elements that you mentioned about liquidity and the way it's going to be functioning versus like flows performance. You talked about the market structure. What are your expectations for flows? How did day one go? How important is that to you?
Day one was a day for retail. We had so many retail orders at the open that the market maker had a hard time pricing our fund. The institutions, are going to be a second half story. They've not yet released the asset allocation models that include Bitcoin, although we're working with some of them to prepare these models, and we think they're going to emerge, around the Bitcoin halving and in the second half of 2024. But just look at these bizarre statements from Vanguard, denigrating an entire asset class. The same with the regulator. And kudos to the advisors like Schwab and TD and Fidelity and JP Morgan and who are giving their clients access to these products. I have a hunch that the clients at Citi and Edward Jones and Merrill Lynch and UBS are going to be complaining, but they will turn eventually, and we know that from conversations. That's where some of our strongest relationships are, and this is a long race.
Okay, I might have jinxed it too there. Bitcoin just hit a low of the morning, so I took the hat off. When you talk about the flows coming in from retail versus so-called institutional, how do you define that institutional client? Because that to me is the big part of this narrative that the coiners have been looking for years. I mean, that this is going to be now a part of the pie for retirements and for folks who are looking to diversify, or however the pitch is. How do you measure that? How do you know if that's happening?
That's AUM. So this is a story of bringing assets under management. Some of that will be from the price appreciation that we expect. Some will be from some of those advisors that I mentioned previously. And I think that, frankly, Bitcoin market performance is going to play a strong role. Bitcoin rallied sharply in the second half of last year. A lot of that was just the weaker dollar because of better liquidity. But we note that, the BRICS group has recently expanded to include 5 other countries. There's significant pro-crypto policy support outside the US in countries like Nigeria, Saudi Arabia, Argentina, countries that, frankly, a lot of viewers watching this don't think about too often, but that's where Bitcoin adoption is much more rapid. And we've got a lot of research that indicates that's going to continue. So as the price appreciates, more of these institutional flows, as always, will come back in.
To your point about the big macro shift in expectations, the lower dollar, the pivot now priced in for the Fed seems to be playing a really big role in the price action. But when you think about the ETF expectations, how do you assess whether or not this is going to be a catalyst for price in the way many expect? Because stocks are at highs. We got a fresh high in the old Dow today. So equities have come all the way back from the bear market 2 years ago. Bitcoin's still more than 20% below its high. How do you think coiners are responding to that? Will there be disappointment if there isn't a record to follow what we've seen in stocks and gold, by the way, a record in gold?
Yeah, so that's why Bitcoin's a great play for this year. Bitcoin operates on a 4-year cycle. Every 4 years, the issuance rate is cut in half. That's happening in April of this year. And, that 4-year cycle was set intentionally by Satoshi to line up with the US election cycle. A record percentage of the global population is going to vote in presidential or national legislative elections this year. That brings the opportunity for disruption, for more pro-crypto policies that we've already seen come out of countries that have held elections. So we're expecting an all-time high for BTC in Q4 this year, following a contentious US presidential election.
Okay, interesting. So the election is a catalyst and politics is a catalyst. Matt, going forward, when you look at the trade-off between where people are going to be engaging in Bitcoin and crypto, yesterday we had a big drop in Coinbase. To me, that makes sense because even though they're acting as a custodian for many of these funds, if there is a competitive place to trade or take part, I hear a lot about how the Spot ETF is going to be the ideal way to trade. I would think that might detract a bit from the exchanges. How do you monitor who's just shifting where they're trading and who's new in this market?
Yeah, so I think a lot of the who's new will see that in the ETF flows. There's ETFs trading in Europe and Canada. They had more than $1 billion of inflows just in the last 2 months of 2023. And the other way is that there's a whole crypto ecosystem beyond just Bitcoin. Bitcoin is like 30% of crypto volumes. And what tends to happen is that as and after Bitcoin rises, crypto natives kind of recycle their Bitcoin profits into riskier, more speculative other coins, which are just open source database projects that are interchangeable with each other. That's what makes crypto so exciting. So you can watch the ex-Bitcoin part of the space as well, and we've got a number of strategies and indices with our partner Market Vectors as well, so that investors can track that on their Bloomberg terminals or FactSet.
All right, Matt, thanks for the thoughts. Like the framework for this year as well, and appreciate the hat. Like I said, I'll be careful how I wear it. I don't, want to jinx anything, but it's a pretty fire hat, so I'm going to keep it. Appreciate you guys.
All right, we'll talk to you soon.
All right, thanks. Matt Sigel, head of digital assets research at VanEck. HODL is the ticker.